You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 3rd day of September 2020. Thanks so much for joining us, whoever you are. Wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, you can go to our homepage at CFRN.net. On the right-hand side of the page, click that big microphone, follow the instructions. You'll be registered in 30 seconds, and that'll give you one-click access to the show each and every day. When you join that way, you only have to do it once, because going forward, you'll get an email each day that has a link in it right before the show. Click that, and you're in like Flynn. Now, on the days that you're out of the office, away from the desktop, you can point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. Just don't have access to the chat box there. We also stream live during the broadcast on Facebook, on YouTube, and Twitter. Let's open with a word of prayer. Heavenly Father, as the events of this day continue to unfold, we seek your clarity, we seek your peace. We know that you are with us and for us as we gather together in your presence. Scripture reminds us the more we seek you, the more we will find you. Lead our surrendered hearts today to the path of your peace. We pray, God, that you would come fully into our situation, both as a group and individually, that by the power of the Holy Spirit, we would be able to sort out the muddled feelings and distorted thoughts that so often plague us. Cover us with a blanket of truth and patience that is not of this world, but comes only from you. We thank you for your many blessings. In Jesus' name we pray. Amen. Okay, amen. Happy Down Thursday. And down down. Yeah, we're having a down day. I'm sure you've had a look at the charts and you know exactly what I speak of. But let me just give you the numbers, the real numbers from around the world. These are the cash markets, the indices. Right now, the Dow's down 572 points. Now, that's almost 2%. The mighty NASDAQ, finally a crack in the veneer, down 499 points. It's a little over 4%. S&P 500 down 97 points. That's almost 3%. And the Russell 2000 down 37 points. That's 2.25%. Now, this is no surprise. It's not a shock. We've known this was coming. We've talked about it and talked about it. We just, because we don't know the future, we didn't know what day it would come or to what degree it would come. But we did know it was coming. So, make no mistake. In the commodity basket, crude oil down 57 cents. Trading 40.94 last. That's a drop of 1.25%. Gold down $10.70, trading 19.34 last. In the Asian markets, at the close, Nikkei posted a gain of 218 points, almost 1%. Shanghai dropped 19. Hang Seng lost 112. And in the European markets, at the close, FTSE down 90 points, 1.5%. DAX down 185, 1.5%. The CAC down 22, about 0.5%. Now, in Asia, we actually had a mixed day because the Nikkei finished the session up almost 1%. But in the UK, it was a red day. And here in the US of A, it is also a big red Radio Thursday. Let's go to Michael, if he's ready, and we'll get a recap of everything that happened this morning in the live training room. Michael, I don't know if you're there yet.
Yep.
Oh,
I just got here.
Alrighty.
Just got here.
And so once Michael finishes the recap, we'll go through the Concierge Trade Alerts and the Logic 247 alerts. I spoke with John this morning. He's going to try to join us, I believe, and then Dr. Tom will join us at 1 p.m., top of the hour, as he does each and every Thursday. Dow on pace, the scroll says, Dow on pace for worst day since July 23rd. Tech on pace for its worst day since June 11th. Okie doke. I've got your charts. They're locked and loaded. take it away.
Okay. And so we had some great volatility today.
Yes, yes.
Good afternoon, everybody. Today's the 3rd day of September 2020. Today, we made, if you're going to read the spreadsheet, you're doing all the CFTC risk disclosures down at the bottom. Today we made 8 ticks in the euro, 47 ticks in gold, and 37 ticks on the ES. That put us at plus 982.50. Today it took 20 minutes and 4 trades to get to the goal for the day. At that point, we're up 120, and we took a total of 13 trades. So on the month now, we're only 3 days in, but we're at $1,977 on the month. And we're averaging $659 per contract per 2-hour trading day. I have now gone 139 consecutive days getting my goal. On the year, we're at 65,433. That's over 164 trading days, averaging $398 per contract per 2-hour trading day. Okay. Now, if you want to become part of the CFRN family, go to EminiFuturesTrading.com. EminiFuturesTrading.com, and just follow the instructions. Okay. All right. Now, we had big days on both the ES and in gold today, and the ES was tanking so bad. I mean, if I show you here on a 30-minute chart, you could pretty much sell anywhere and make money. But I was waiting for the slingshot to give us the okay to sell, and then I just did several times. Let's see. We had a YVR long right there that worked out. A YVR short here and here. And I'm scrolling back to get to the trades that I actually did do. But while I scroll, I can tell you about the YVRs. There was YVR long. I did do some YVR trades today too in the room, but I didn't count them toward the total. Now, I was expecting to get a big move back up to retrace some of what was lost, and it was trying to. I had a short here, ended up being a break even because I couldn't move fast enough. But there was a short right there that I didn't get, and I'm not sure why it's showing the low of the day right here. That's what this red line is. But we had a short. Let's go back to the beginning. Let's start at the beginning because that's how I have it itemized. Okay. So our very first trade, we only got 1 tick on. No, wait, I'm sorry. This is the ES. Our very first trade, we got 4 ticks on. That was this one. We picked up 4 ticks on that one, and then we missed that one. YVRs everywhere today. Let's keep going here. On this one, we picked up 6 ticks, it looks like. And then the next one was a pretty big trade. Yeah. On this one, on that second one, we picked up 9 ticks. And on this one, we picked up 24 ticks right here. Okay, and that was a break even. There were more trades in there, but it was going into the low of the day most of the time, so it was kind of hard to pick them out. Okay, now with YVR trades, there was plenty of those today on the ES, and so there was just a ton of opportunity. Now in crude oil, we had a couple of trades in here. See, it was more active than it normally is, but We had a shot at a long trade right there that we missed. We picked a break even on that one. We missed that short right there. Missed that one and that one. And we actually got +1 on that one. Then during the break, it had this great move up right here. The entry point on this would have been right here to begin with. And then right there and there and there. And you know, there's some good YBR trades on crude today too. Right here. And again, you only need one of these a day. You know, we don't encourage you to trade 50 times a day. You know, we encourage you to trade until you get your goal and then stop. Stop. All right, here on the euro was a YBR this morning. This one right here, we picked up 8 ticks. That was the only trade that we actually took on the euro. There's some good pre-market activity, but not a whole lot afterward. You know, there was a long trade here. They must have done something. They gained capital during the break because the high and low of the day are not anywhere near right. There was a shorting opportunity here and a long opportunity here. Okay, and a YBR long right here. And that was pretty much it for the euro. Now, gold again. You know, the craziness in gold, it's not going to stop anytime soon, I don't think. And you know, the ES, the volume on the ES, the sum of the bid and ask, I mean, look at it right now, it's in the 600s. That's craziness. And we don't roll until next week, a week from tomorrow is when we roll the contract. Well, not gold, but the ES. Yeah, we roll next week. Anyway, in gold, our first trade right here was actually +1 tick. Then we missed that one. We had a break even there. Then we picked up 6 ticks on this one to put us at +7. I missed that one. It was a nice YBR trade right here. And started rolling around. There was an opportunity right there that I missed. Then on this one, I picked up 14 ticks on that one. Okay, and that put us at +24. Picked up 10 ticks on that one, put us at +34. Missed that one, missed that one. YBR long right there, YBR long right there. And we picked up 13 ticks on this one to put us at +47. Okay, then I missed a bunch of trades in here. I was just getting tired this morning. It was wearing me out. We had a short there, you know, YBR short there, a YBR long there, a short there, a short there, a short there that I missed. But I didn't really miss them. I called them out, but I was just tired. All right, so during the break, there was a YBR short right here. Again, you only need one of these a day. Okay. YBR long right there. And that was it. That was our morning session. So again, if you want to become part of the CFRN family, go to eminifuturestrading.com and just follow the directions. Okay. Now, oops, didn't mean to do that. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 3rd day of September 2020, and we made 8 ticks in the euro, 47 ticks in gold, 37 ticks on the ES. Put us at +982.50 on the morning session. Now, that's one contract, 2 hours per day. Okay, and you can see I missed a whole bunch of trades. It took us 20 minutes and 4 trades this morning to get to the goal. At that point, we're up $120 a contract, and we took a total of 13 trades today. So on the month now, we're up $1,977 per contract, That's over 3 trading days, averaging $659 per contract per trading day, per 2-hour trading day. And again, I missed most of the trades. I'm on my 139th consecutive day of getting my goal. And on the year now, we're at $65,433. That's over 164 trading days, averaging $398 per contract per 2-hour trading day. Now, again, that's per contract per 2-hour trading day. And if you want to become part of the CFRN family and you're not, go to eminifuturestrading.com and follow the directions. Okay. Okay. With that, I can pass it back out to fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am indeed.
Good.
Okay, recap of the recap.
Today it took 4 trades in 20 minutes to get to $120 per contract.
Good job.
Thank you.
Okay. All right. So that's what happened this morning in the live training room from 9:30 a.m. to 11:30 a.m. Eastern. That's where we do the training. That's where we teach you the strategy, the methodology, the principle upon which markets operate, and the principle upon which our methodology and strategy operate. Now, we start the week out on Sunday evenings at 6 p.m. Eastern. That's when the Logic 247 channel opens for business, 6 p.m. Eastern, right at the Globex Open. And that channel stays open around the clock until Friday afternoon at 5 p.m. Eastern. Now, this is where we actually sort of hand you the trade setups. Michael is teaching you each morning 2 hours a day how to find these trading opportunities on your own, but to speed up the learning process, we actually give you live, real-time, living, breathing, actionable alerts that you can trade as you are learning the methodology and the strategy. Now, when you first start out with us, our 24/20 blueprint is going to put you in the simulator or in the demo account until you put together 10 consecutive days in a row where you reach the goal, your goal, our goal, whatever you choose, in 10 trades or less. There is no reason with any methodology, strategy, or set of indicators that no one should ever encourage you to put live or real money to work in live markets until you first understand the method and the strategy that you're utilizing. So, the 24/20 blueprint wants to see you do 10 consecutive days in a row. Once that is accomplished, then the blueprint does give you the green light to go live with just one contract. Now your goal with the one contract is to increase your account balance by $2,000. Once that happens, you get the green light to add a second contract. Now, the purpose of increasing your account balance by $2,000 is so that when you add the second contract, you're actually adding it with profit you earned in the market. Okay? Now, that first contract, of course, you've got to fund that with your savings or the money under your mattress, wherever you get your money. But following the blueprint, with contract number 2, and then number 3, number 4, number 5, the way the blueprint works is you're always adding the next contract with profit you earn in the market. If the blueprint says it's time to add contract number 4 or number 9 or number 10, if you don't have profit in your account to underwrite or to fund the additional contract, then of course you should not add. In fact, you should book a mentoring session with myself, Michael, both of us, so that we can go through the trades that you've taken over the last few days and see if we can help you understand why it is that you don't have the profit available to add that additional contract. Once you go live, anytime you have 2 days back to back where you don't reach your goal in 10 trades or less, that's when you should come out of the live market back to the simulator, which is not a walk of shame, it's a smart business decision. Because remember, the goal this time is not to just blow up another account by throwing money at the market. This time the goal is to actually learn how markets work. This time the goal is to actually learn how to trade. And the goal is to actually build a profitable trading business. So when you hit a rough patch or a hiccup, which will happen, that's just the nature of this business. Again, not a walk of shame to go back into the simulator for a few days to kind of figure out what happened, get your confidence back, and then you're right back into the live market, right where you left off. Now, so far this week, since we opened Sunday night at 6 p.m. Eastern, Logic 247, we are in week 109. 42 total alerts have been issued. 3 of them never triggered. Still waiting on the results of 2. And so we've had 37 actionable alerts so far this week. 2 of those stopped out based on not risking more than $300 per contract per trade, less when possible, using the simple 3-step methodology that we teach you. Okay? One of the first things you do after you become a member is you book a one-on-one mentoring session. The first thing you do is you get hooked up with Telegram. This is a free messaging app that we use, and we use it for everything. We have discussion groups. It's where the weekly trading zones come. It's where the concierge alerts come. It's where we shoot the breeze about things other than markets in a separate channel. And of course, it's where you get the actual alerts. Okay? Now, last week, week 108, we had a total of 55 alerts issued. 6 never triggered. 1 carried over to this week. So we had a total of 48 actionable alerts last week. 4 were stopped out based on not risking more than $300 per contract per trade. So that's 8% of actionable alerts were stopped out. Now that's not a typical number. What we've averaged over the last 108 weeks is 20%. Now the week previous, week 107, I believe it was, we actually had 22% stopped out. And then week 106, I think it was 12%. Something along those lines. Let's see, I probably got it right up here. It was, yeah, week 107 for the entire week, 22%. And then the week previous to that, 106, right here, yeah, 12%. Okay, but the average, okay, over the last now 108.5 weeks, because we're in week 109, the average is 20%, and where we sit so far this week is right here. 37 actionable alerts, 2 stopped out, 5%. Now, what that looks like in the channel as these alerts are coming your way, and again, we start Sunday night, 6 p.m. Eastern, okay? And so Sunday night started week 109. There's the one carryover. Good evening, welcome to Globex. And the very first alert coming out of the gate, the number you see here is Pacific time. I'm on Pacific. Okay, my charts are on East Coast time. So when we go through the charts and I hover over a particular candle, you'll see that reflected in Eastern. But Telegram, the messaging client, reads your computer clock, and so the times that you see in Telegram will be whatever time zone you're in, whether it's Pacific or Central or East Coast. Okay, so the first alert, number 5051, that was our sample size when we started Sunday night. That means we've issued 5,051 alerts at this point, and this was to just be long the S&P. That was followed up with a long on the Dow, Russell, the NQ, crude oil, silver, and I did the Australian dollar Sunday night by special request. Then, as we rolled into Monday, short the Dow, there's short on the Russell, there's a long on gold, no trigger on gold. There was a hedge here. There was an opportunity to go long, followed up by an opportunity to be short. The short side did not trigger. And then we continued on with a short in the S&P, another short in the S&P. This S&P never triggered. And then we had a short on the Dow. This short on the Russell was stopped out. Crude oil, silver, thumbs up means that price found the target. And this one, and these numbers at the top, okay, that is the swing high of that particular move icon. This one, the alert was to buy or be long 28.55, initial target 28.57, a 2-penny move in silver is $100. And then the weekly trading zone, on a long trade, the weekly trading zone above is always the final trade to target on an alert. And that was 28.65. The actual swing high on this was 29.12. Now, a $1 move in silver is worth $5,000. Okay? Profit or loss, it's $5,000 if the price of silver moves $1. If gold moves $1, then that's worth $100 profit or loss. And so as we continue, long on the Dow, long on the Russell, here's silver, gold, S&P, Dow, NQ, crude, NQ, euro, the Dow, the Russell. And again, these are coming to you. Whenever you hear your phone go dee-dee-dee, make that little telegram sound, or your tablet or your computer, and it's a good idea to have the messaging client installed on all of your devices. Again, it's free, it's secure, it's fast, and there's no commercials, no advertisements, no pop-ups, none of that stuff. And so as we continue into today, September 3rd, a short on the Dow. Now this one here was to be short 775, and at the time of the recap we had dropped to 472. So that's for, if it was 472, that was the swing low, which from 775 to 475, that would have been 300 points. The Dow pays $5 a point, so that's $1,500 per contract traded. This was to be short the S&P 35.12, initial target 35.10, potential support at 35.05, and then the weekly trading zone, which is the trade 2 target, the final trade 2 target, is 3,500. The swing low was 35.02.75. So basically a 9-point trade at $50 a point, $450 per contract traded. Then a short on the Russell, that was to be short 1561, and we dropped almost 20 points at the time the recap was done. At $50 a point, that's $1,000 per contract traded. Another short on the NQ. There's crude, we're still waiting on results. Gold, still waiting. And silver, to be short 27.18. And the swing low at the time of the recap was 26.64, which means it made it to the first target, to the second target, and then it made it down past the weekly trading zone at 68.69. So from 27.18 to 26.65. Let's do it the simple way. Use a calculator just to give you a rough idea. 26.64 minus, how about 27.18? Do it the right way. 27.18 minus 26.64. Alright, that's 54 cents. Okay, so if a $1 move is $5,000, then a 50-cent move is $2,500. And so you're looking at it right here, and that went out to every one of our traders in the channel this morning at 7:50 a.m. Pacific, 10:50 a.m. Eastern. Okay, so that's how logic works. Okay, these alerts, they pop into the channel live in real time as opportunity presents itself. Our other alerts are called the Concierge Trade Alerts, and these are a little bit different in that instead of coming out as opportunity presents itself, we take a look at the entire session and we look at the possibilities, you know, for higher prices, lower prices, whatever the case may be. And I was a little late getting these out last night. They got out at 8:15. Typically they come out right after the Globex Open, which is 6 p.m. Eastern. So last night, S&P, the Dow, if you want to grab a screenshot, feel free to do so. S&P, Dow, Russell, Crude, NQ, 10-year notes, gold, Canadian dollar, euro, British pound, silver. Okay? And the best way to handle these, because again, this report comes out at the beginning of the session, but the numbers are good for the entire session. And on days like today, when we have a really directional move, you might only see one trigger. Typically, though, we will see these alerts trigger multiple times throughout the session. So that gives you more than one opportunity to, you know, get your points. So let's go to the chart. We'll take a look first real quick at the daily chart. Okay, S&P 500. Now, we used our Fibonacci price extension tool the other day to give us this area where the market might potentially find resistance. Not based on politics, not based on a virus, or rioting in the streets, or any of the other things we have happening right now. People out of work, businesses not able to open. Well, I don't have to tell you because you're living through it. We all are. Now, I just saw John pop up on my screen here. So what we'll do is we'll talk to John, and then we'll talk with Dr. Tom when he pops on. And then we'll do a recap of each and every one of these. We'll just take a walk right through each one and see how they turned out. As you can see on this daily chart, that little window of opportunity that we put up yesterday based upon where price was and where the BBC was and the 24% Fibonacci retracement. Now that's changed because if you look here, see, because we have a slightly higher high, we need to adjust that. Okay, that puts the shallowest Fibonacci retracement right above the BBC. So that becomes an area. Okay. All right, John, let me get your mic open. There we go. John, welcome to the show.
Hi there. Thanks for having me on.
You bet. Good to have you with us.
I think if we can hold here, we're probably going to bounce. This is a potential inflection point. We kind of, you know, sometimes in the past on this show, we've called a rally around about this time, and I think it could happen. So to what extent remains to be seen, because the market's under extreme pressure this morning, the likes of which we haven't seen in a while. And, you know, you can't rule out lower prices ahead and possibly substantially lower. We're having a very bad day on the semiconductors today, so that's not a good thing either. So we kind of been talking about this possible shakeout over the last few days, and it really is looking like it's finally happened, and it's a tough one. This thing is, it's got to get nipped in the bud here, or we're in real trouble. The silver and gold.
Do you see any one particular thing that? I mean, we've been waiting on this retracement. I don't want to call it a crash. It's just the market doing what the market does. Puts in a leg, and then it does a retracement, and we haven't had a deep retracement in quite some time, and so we're due. But the market will find support somewhere along the way. But is there any one thing that you attribute to sending us lower today?
The unemployment claims came in lower, but I think they used a different change to change some things around. Maybe the market didn't like that. That's one thing. I think Trump, just the last couple of days, he's been hyping the market a little bit, which just didn't help. We have been making new all-time highs. Incidentally, the mid caps and the Russell kind of got up to a double top. They didn't make a new high. So that was a bit of a giveaway, and we warned about these semiconductors possibly breaking, and unfortunately that chart doesn't look very good right now, the way it's set up, and it could be the beginning of a serious down move, and certainly to be down this badly this early in the day is troubling. Because I think we've seen this market sort of being down. The Dow opened higher, and now we're down 700-800. 700 or so. This is really, really bad technical action. So, and even this just little rally we just had, it's petering out, so it just doesn't look good. But I think there's still a chance we will rally from somewhere around here in the next half an hour or so. Maybe a couple of more rally attempts around about 2:30 or so, but after that, there's a pretty good chance the last hour. I think people got a wake-up call this morning, and maybe people have just said enough is enough. I'm out. I'm bailing, and it's just once. The difference between yesterday and today is like night and day. Yesterday the market was pushing new highs all over the place, and the day before, or in the last few days, and now we're suffering from this. Unfortunately, it could be the beginning of a lot of problems. The political situation could get worse here in the next few days and weeks with these polls and things. Although Trump is actually at 50% on the Rasmussen today, which is a big deal in terms of his getting reelected. So I think anything north of 50% on Rasmussen is pretty safe.
You need to get that?
That's okay. But the market is likely to. It's taking. I think today it's taken on a mind of its own, and the big lever in the sky has gone from bullish to bearish.
Yes,
and
yes, it has.
So that's a real problem now, because you do have a lot of people who haven't seen a down day in a while either,
Right.
And so there could be a lot of panic developing.
A lot of panic because again, most folks don't understand that these retracements, these drawdowns, it's as much a part of trading as breathing is a part of life. It's inhale, exhale kind of thing.
Yeah.
And
and we've got a Tuesday coming up next week, and we've got to get through tomorrow too. So the the whole of next week looks like it could be a bit of a brutal experience if we don't nip this in the bud, today. Or we have seen instances where we've had perhaps not quite as sharp a drop as we're having today, and we've magically overcome it a few days later and gone to a new high. You can't rule that out from happening because this market does have an incredible ability to come from behind. So you have to be on your toes. If we do go into next week and it turns out to be a bloodbath, we'd probably have a bad Tuesday and maybe rally Wednesday or Thursday and then have another retest on Friday. Maybe that would be it, and that would be a replica of what happened in January, February, going into February 18, the first week of February 18. And, after that, the market rallied again. So the reason I mentioned January, February is because the VIXs have been foretelling of bad tidings to come the last few days, and the market didn't lie, and it's delivering on what the VIX has been, basically saying. So today the VIX is, we started out at under 20, and we hit 27.5 today, and it's up substantially, and it's likely to be a big up week and et cetera, et cetera. The SQQs are also up. They didn't exactly give the game away last night. They pretty much closed on the lows, and who could be forgiven for thinking the Nasdaq's going to have another routine day today? But it's changed, and the VIX has gapped. The SQQs gapped up, and they're on the high of the day right now at 22.5 or so. So pretty good trade if you were able to jump on it. Yesterday it did kind of come back, and it made a kind of a double bottom, but it kind of closed near the lows of the day, so it wasn't exactly.
Now tell me again which one you're looking at.
Sorry, the SQQQ.
SQQQ. There we go. Wow.
Yeah, it did have a doji. See that kind of a funny down doji. So that was a wake-up call, and look at it today. So that's the first kind of strong update we've had in a while. It actually kind of looks like a bit of a ominous-looking bottom now, the way that doji got reversed today. So, the opposite of looking at the semis and things like that. We really have put in, unfortunately, if you look at across the spectrum, the Dow didn't, got to try and fill that gap yesterday. It started out higher this morning. It's gone negative. That's really bad. All of the indices in one form or another are putting in divergent sort of tops. The gold and silver led the way down, and they're continuing to act fairly weakly. So silver in particular, the outlook for the metals is possibly another leg down, then a reversal. Really the market is there's a lot of liquidation going on right now. We're down about 1700, minus 1700 on the advanced decline, which is not too serious. That's actually fairly, we're going down. We're going down more than the advanced decline kind of is speaking to at the moment. So you could say that the advanced decline is a potential positive if it goes up anymore.
Right.
So and here we are. We're having another attempt now to try and rally here. So if we get a decent rally, cut back 100 or 200 points on the Nasdaq, that would improve the situation a lot. And maybe that will happen, but I'm starting to think less and less that it's likely.
Well, what do you think a potential low?
Oh boy, I don't know. I wouldn't.
For gold.
I think you got to be prepared for anything right now. This is, we've never been in this kind of territory before, and in terms of going crazy to the upside, it really has been a lot like mid-February in the last few days, and especially with Tesla and Apple, and the technical damage that's being done to these to almost everything right now is not very encouraging. So if we go lower, if we continue lower, it really could get bad. That's my sense of it.
Well, we from the lows that we put in back in March to this most recent high, August 7th, it looks like. We're already at the 24% Fibonacci retracement, and so the next drop down would take us to about 1850, roughly. If we take out this swing low right here, which was put in on August 12th.
Yeah, I mean, the gold, Dwayne, looks pretty bearish, frankly. It's kind of what we were saying a while ago. The A wave was very swift, and then we had this sort of B wave rally, and now the likelihood is a C wave down to somewhere like 1800 or so, maybe 1750. After that, we could really go places. And remember, I sort of view this gold as similar to February, January, February of 2016. We had a pullback into the mid-January, and then we rallied a bit, and then so a month later, when we made the mid-February bottom, that was when the gold stocks took off, and we're unstoppable for 6 months. We had a 6 months rally, the biggest gold move in stocks in 30 years. So after this pullback, it would be logical that the gold could go way higher, because after this now, I mean, part of the reason why this is happening maybe is because this stimulus thing hasn't been done yet, and is really sort of frozen.
What is it they can't agree on?
You know what? And then maybe they're going to make a deal over the weekend. I mean, that's something to keep in mind. Yeah, I think if they make a deal of, let's say, $1 trillion, it's somewhere between half a trillion and $1 billion. Excuse me, $500 billion, $1 trillion right now. If it's anywhere north of around $1 trillion or higher, this market could snap back pretty dramatically. So I think that's got a lot to do with it. And if there's more stimulus right before the election, which is possible, that could be the trigger that would send gold up a lot. So that's worth considering as well.
Right.
I think you can see this. You can sort of see it's a little bit like the bottom in March. When you look at that gold and look at the rebound we had. Mm-hmm. Imagine having that juggernaut of a move from like 1450 to 2100, and the next leg takes us from like 1800 through 2700. A really big, long-term up move.
Mm-hmm. Yep, certainly.
Have a juggernaut move. Yeah.
Yeah, on gold, we would just need to take out, we've got this potential resistance here right at 2,000, big round number, and then 2025, and, the bulls come back in, the buyers come back in. Now, you mentioned yesterday something about the dollar, but I don't think we ever looked at that chart.
Yeah, the dollar rallied. The dollar is definitely rallying today. Not a whole lot, but it's starting to. I don't think that's necessarily a particular market mover at the moment. The dollar going up might actually be positive for the market. So, but I think temporarily it's a problem for gold and silver.
Mm-hmm.
Yeah. So we could rally up to 96, maybe something like that.
I mean, on the daily chart, silver doesn't look so terrible.
Well, I think that doji, you see that little kind of a double top there that's developing. I think there's a potential to push down, fairly sharply in the next few days. Again, around about the 26 3/4, there is support there, and I did warn people. I said, don't fall in love too much with the short side. You did all right in the last couple of days, but it could hold here, and then it could just start going back up. Especially if this stimulus deal is done, maybe that would push it right back up straight away. So, just because the technicals look like it may go lower, I wouldn't bet the farm on it.
Yeah, I agree.
Okie doke. Well, listen, say hello to Tom, and have a great afternoon.
Hey, thanks so much. We'll talk to you tomorrow.
Okay. Bye-bye.
Okay. All right. Let me see if Dr. Tom is here yet. He's usually pretty prompt. I don't see him just yet, so we'll continue with the recap. Okay. Now, I gave you a screenshot of the Concierge Trade Alerts. We rolled through all the logic alerts. Remember, those come out around the clock, live in real time, as opportunity presents itself. These come out as a static report, good for the entire session, where you go put a couple lines on your chart. One on the long side, one on the short side. Everything price does between those two numbers is price trying to make up its mind what it wants to do. Because until price makes up its mind what it wants to do and starts doing it, well then we have nothing to do. The logic alerts do walk us up to the trigger on the long side of the concierge or down to the short side in most cases. Sometimes the numbers will be identical, sometimes they'll be very close, but whenever you have two different methods pointing at the same important price, important area, well, that's where you'll typically find your highest probability, lowest risk trade setups. Okay? All right, so there's another shot to grab a screenshot. Now, on the S&P, the alert was to be short, the concierge alert, 35.58. Now, the trade to target would be the zone immediately below 35.26/27. So that's, 25 plus points at $50 a point. And then from there, these two zones were very close together this week. One candle spanned it, one 30-minute candle, actually it did it twice. We spiked it, and basically we sliced through it, and only three things happen at a weekly trading zone, and this happened to be the least likely thing, but it happens. And on days like today, it happens quite a bit. But you slice through, and when that move runs out of steam, price will retrace most times to the zone that is sliced through, and then continue in the direction of the slice. Now, from the entry at 35.58, there has been no exit signal at this point. This thing has dropped $5,350 per contract traded. One contract, if you're still in the trade. Now, the only reason you would still be in the trade is if you were waiting for the exit signal. And an exit signal, what will happen, as you can see, the step line is on the left side of red falling. Okay? And those are the conditions that we want for a short trade. We need to be below the BBC. That's the bull-bear cross. When price is above the BBC, we anticipate higher prices. But then when price gets below it, as it did right here, well, it consolidated here, and then really this is where it got below. Bearish cross, right? Then the trigger. From that entry to the swing low, $5,350 per contract traded. Now, what the exit signal will look like when it prints is this step line is going to, you see how it steps over and down, over and down, over and down. It'll step over, step over. So what happens is the step line, instead of being on the left side of red and falling, it will suddenly be on the right side of red and falling. When that happens, what we're looking for, because this is a short, we're looking for the first green candle that closes above the step line after it crosses over. On this long move here, okay, price traded up through that zone, and then price started to walk sideways. The step line, as you can see, it went from the left side of blue and climbing to the right side. So as soon as that happens, now you're on lookout for the exit signal, okay? And in this case, the exit signal came in this candle. I mean, it would be wonderful to get out at the swing high, or in this case, the swing low. Unfortunately, that's just not reality, because no one knows it's a swing high or a swing low until after the fact. So waiting for the exit signal on an extended move is never going to get you out at the swing high or swing low. Only luck can do that, and that's not a good trading strategy. But often it does a very good job of getting you out in the neighborhood. So the swing high was 35.87, and then the first red candle that closed below the step line after it crossed from the left to the right side, blue and climbing, closing price of that candle is 35.80 and a quarter. So that is the, I just wanted to show you, now this is a long, but on a short it's going to look exactly the same in reverse. In other words, the step line will at some point get on the right side of red and falling, and then you'll be looking for the first green candle that closes above the step line. There's Dr. Tom. Okay, so we're going to go to Dr. Tom right now and chat with him. After that, we will continue with the recap. We'll go through the Dow, the Russell, the NQ, crude, gold, all those, and of course, answers to your questions. Dr. Tom, your mic is open. Welcome to the show.
Oh, thank you very much.
Thank you,
Good
sir.
to see you.
Good to see you. How's Dr.
You
Tom's
gonna
world today?
give me the slides?
Oh, yeah, sure. I'll send you over the
Well, we're good.
right now.
We are blessed.
Make presenter. Yes, there we go. You should have a pop-up on your end that says accept or share or
Got it. How's
something
that?
like that. There it is. Americans work 120 days a year to pay the government.
It's pretty sad, isn't it?
Yeah.
It's actually, I was trying to find an updated chart. It's actually almost 150 days a year now. It used to be 4 months. Now it's almost 5 months if you count in all the different kinds of taxes we pay. And people think that's crazy because they don't think they're paying that much. But they've done such a good job of disguising so many of the taxes that people don't realize they're paying them. And they go to so many different places. I've broken it down by federal, state, and local. And I'll just run through them real quick. But it's pretty fascinating how they manage to tax us so much. And so many people are so little aware of what they're paying. Every country in the world that's taxes people more than 50% of their total income has ended up going down in flames. And many, many people in this country are already paying well over 50%. But then we have some people that are paying nothing. So it seems to balance out, and people aren't rising up in the streets complaining about taxes. They're complaining about other things, but not about taxes.
Mm-hmm. Right.
But the most important tax that's not even on any of this is the tax of inflation. In addition to all the other taxes, whatever money you think you're making,
Mm-hmm.
they're also taxing you 5% a year by devaluing the dollar.
Right.
So keep that in mind as you look at this. I'm sorry, you said something?
No, I was agreeing with you. Yeah. The hidden tax.
Oh, the hidden tax. And it's really the most insidious tax because what it does is discourage productivity. You know, you're working hard
Mm-hmm.
and you're getting less for your money, so why work so hard? So here's the federal taxes. Well, you know, the other thing is these so-called progressive tax, where they say it's fair for some people to pay more taxes than others. I don't know where they get fair out of that, except that's the socialist philosophy. But what are the kind of tax, like sales tax? If I'm a poor guy and you're a rich guy, do you pay more sales tax than I do?
No, it's all,
No.
no. What are your,
That's a fair tax.
What are your thoughts on the whole flat tax? I haven't heard much discussion about that of late. It was a popular topic years ago, but
Well, that's because Ron Paul's not around to push it, but absolutely. A flat tax is a fair tax. But what they call a fair tax is poor people paying nothing and wealthy people paying, at times in this nation, it's been up to 90% of their total income. That's what FDR put in. And when Ronald Reagan became president, the top tax rate was 70%. And he said, this is crazy. He dropped it down to 28%. But, you know, when a guy who makes $20,000 a year goes into the store, they don't ask him what his income is and charge him less sales tax.
oh yeah,
You know, on your real estate taxes. If your house is worth $100,000 and you make $10,000 a year, and another guy's house is worth $100,000 and he makes $1 million a year, you pay the same amount of tax. That's fair, where everybody's treated fairly and equally. But there's nothing fair about charging people more just because they're making more, because it discourages productivity, like I said.
mm-hmm. Right.
So anyway, Social Security tax, 12.4%. Now, that's both sides, okay? So if you're employed by somebody else, then the employer pays 6.2%, and technically the employee pays 6.2%. It's deducted from his pay. But really the employee pays the full amount, doesn't he? Because
Yeah.
the employer just lowers his salary
right.
enough to pay for their half of things.
Yeah, there you go.
So there ain't no free lunch.
That's right.
And if you're self-employed, then you pay both sides. You pay the 12.4%. Everybody pays 2.9% in Medicare. Unemployment tax, 1.2%. Corporate tax can range anywhere from 21 to 35%. Estate tax or death taxes, 40%. Gift tax. Let's say you don't want your kids to lose 40% of your estate when you die. So you want to give gifts to them before you die. Well, they're going to charge 18 up to 40% depending on the amount. So I think generally you could give 10% or $10,000, I'm sorry, to each of your children, or really to anybody you want to, per year. So if you have a good amount of money and you're getting older, that's a smart thing to do. Just start giving everybody $10,000 a year. Tell them to put it in an account where they're make it at least 10% a year, and then they won't have to pay taxes on it. Excise taxes. These are hidden taxes that covers jewelry.
Excise is from the root word excess. Is that? Just kidding.
Yeah.
Or from the root word excessive. Yeah. No, I got you.
It comes from the Latin exegesis, which means stealing from you in a sneaky manner. I just made that one up totally.
Yeah, you did good.
But it sounded real, didn't it?
It did.
But in addition to airfare, jewelry has hidden taxes on it. What they call luxury cars. If you pay over a certain amount per car, it's a luxury car. And that tends to be about 7.5%. That's taxed before it gets to your guy you buy it from. And then when you buy from him, then you pay sales tax on top of that. Okay? And I didn't list that this year, but tariffs. Whenever we charge tariffs on goods coming in, those tariffs are added to the price of the goods, again, before they get to the retailer. So that's another hidden tax. The fuel tax. When you buy gas, you're paying so much a gallon. Really, 18% of that's going to the federal government. It's another hidden tax. Now, of course, states, they want a tax too. They get unemployment taxes in addition to the federal unemployment. And only 7 states do not charge a personal income tax. And the personal income tax is always in addition to the federal income tax. So you can really get hit badly. I have one client that was going to sell his house. He lived in Connecticut. And if he had sold it while he was a resident there, he would have paid $62,000 in excess taxes, just in personal income tax. So he moved to Florida, and he established residency down here because he wanted to buy a lot of gold to protect his assets. And he waited until to close on his house until he was a Florida resident, and he saved $62,000. Wow. In other countries, yeah, I know, it's amazing. You know that French guy, Gerard Depardieu, whatever, he's kind of got a big head and he acts in a whole lot of things. He's a famous actor.
Yeah, I'm sure I would. If I saw him, I would know exactly who you're talking about. But the names.
Well, he was of Russian descent. But he was a Frenchman. And when he retired, he was paying so much in taxes that he moved to Russia, and he saved millions and millions of dollars. The former president of France, can you imagine a president of a country? He moved 20 miles over the border into Brussels, and he saved millions of francs in taxes. Wow. Most states also have corporation taxes.
Yep.
And many states, including my state, charge personal property taxes on, and I'm quoting from Florida law, virtually all objects of value, including art, and only accepting household goods like, your couch and your dining room table stuff, which aren't worth anything anyway.
Well, even
but if you have personal property
here in Arizona, you owe property tax on like your desk and your calculator, and you had to. You paid tax when you earned the money to buy the desk, and then when you earned money, paid tax on that money, then you bought the desk, and when you bought the desk, you had to pay sales tax on the desk, and then they want you to pay property tax on the desk now that you own it. That's just insane.
You're right. And that's every year.
Every year.
It's the tax that just keeps on giving or taking, I guess. And they justify it by saying, well, you pay real estate tax. Yes, I do. but I didn't pay sales tax on my house when I bought it.
Right.
And the real estate taxes are unbelievable. We'll get to that in the next slide. But in some states, like again here in Florida, I pay as much in tax every year as I do for PITI, which is principal, interest, taxes, and insurance. Half of my mortgage payment is real estate taxes. Nuts.
Wow.
Okay, now here's a really crazy one. Counties and cities that charge personal income tax. That's in addition to the state and the federal versions. So you could pay 3 or even possibly 4 income taxes. Like, for instance, if you live in New York City, they actually have a city personal income tax. And there's a county personal income tax. There's a state personal income tax. And the federal.
Wow.
It's just...
It's no wonder
goes on and
everybody's
on.
leaving New York City.
Oh, yeah. That and the fact that the governor will not protect them from the peaceful protesters who are killing them and burning their businesses down and so on. But they're doing it peacefully, right? They're just sick of it. So one thing that they've learned from the whole scamdemic, I call it, is that you could do business anywhere. I was talking to a guy the other day. I've done business with him for 25 years. He's a New Yorker, born and bred. He used to love living there, and he never thought he'd ever live anyplace else. But he's moving because with the all the lockdowns and everything, he found that he could do his business from his house just as well as from his office. And his office in Manhattan was costing him like $7,000 a month in rent, right? And he didn't even need it.
Wow.
So now he's going to move to Tennessee,
that probably wasn't that wasn't a very big office, I don't suspect.
No, not for Manhattan.
For $7 grand. I mean,
it was just him and his secretary.
Yeah, right. Okay, gotcha.
But now, he asked me what I thought. I said, go to Tennessee. Great weather. It's not too cold like it is in New York. Not too hot like it's in Florida. Down here, we only have 2 seasons, hot and hotter.
Yeah, we have that same.
And so he's looking at Tennessee now.
Here.
We share that blessing. But he's looking at Tennessee because it's one of the states that has no personal income tax. And so then, of course, you have the real estate taxes there at the local county level. And as I said, they can be huge. Some places are not so much, but here in Florida, it's monstrous. And then you have all these taxing districts. In most counties in the country, they have a special taxing district for the parks, the fire department, police department, sheriff's department, schools, libraries, roads, canals, etc., etc., etc. If they can find it, they'll tax it. So there's all these special. So all your taxes are broken up in all these little different locations. You say, "Oh, well, it's not that much. I'm only paying like $500 a year for fire protection, and $700 a year for police." But you add them all up, and it's a lot.
It is.
Then there's business and professional taxes. If you want to be in business in most parts of the country, you have to pay a business tax.
Yeah.
If you're a professional like a lawyer, a doctor, insurance agent, candlestick maker, you pay professional taxes. And then here in Florida and in a number of other places that are considered resort areas, they have special resort taxes. And that's like 7% on top of the sales tax. So it's just unbelievable the ways, it's almost Machiavellian, the way they've figured out how to tax you so much money in a way that you don't even know what's happening. So your real tax day, this was as of 2012, was somewhere around mid-July. It's not April 15th. April 15th is just the day it's due. But the real tax day is the last day you paid taxes. And so, like I said, right now, it's more like 150 days, which puts us at the end of July. So let's see. Yeah, no. It is the end of July, so it's actually probably more than 150 days. But anyway, that's how long an average, not a rich person, but a middle class American. Of course, we have to figure in the fact that half the people in the country don't pay any tax, and of course,
that's true.
They're happy to vote for tax increases on us
because it doesn't affect them.
They know it's not going to affect them.
Yeah, I guess I hadn't really thought about that in that manner.
Well, you know, I've heard several different famous people quoted as saying this. I guess it doesn't really matter who said it. It's true. And that is that whenever a republic becomes a democracy, then the, I think it was a French guy because it's got the word largesse in it, then the people who are paying no taxes will vote for huge amounts of money to come to them from the public largesse, which is, you know, the public taxes. So to half the people that are working and making money will be forced by the people who are making no money, but now have the majority vote if we become a democracy. And guess what? They're going to vote every time to take your money and have it sent to them. Here's my mailing address. So I know there's somebody out there saying, but we are a democracy. No, we're not. If you listen to Democrats, they'll say over and over, we are a democracy. Even right after saying the Pledge of Allegiance, after they take out under God, they still have to say, and to the republic for which it stands. Mm-hmm. But then they'll swear up and down, we're not a republic, we're a democracy. Well, what did Benjamin Franklin say after the Constitutional Convention? You remember the story, Dwayne?
Which story?
About this lady that came up and asked Dr. Franklin, said, you know, well, Dr. Franklin, what have you given us after the Constitutional Convention was over?
No, I don't.
And his answer was, I think her name was, you've never heard of that? Okay.
I don't think so.
I believe her name is Mrs. Brown, and apparently she was someone known to him because she felt free to just walk up to him in the street and talk to him.
And she was talking to
Benjamin Franklin. Well, what have you given us? Benjamin Franklin, yes.
Okay, gotcha, okay.
And his answer was, a republic if you can keep it. Okay, so what's the difference between a democracy and a republic? Well, democracy is mob rule. You know, we think of democracy in a positive light because the socialists really want a democracy so that they can take over every country, because if they can get enough socialists and convince enough other people who aren't socialist that their cause is just, then they take over the country. It was only like, I think something like 6 or 7% of the people in Russia were actually communist, but they took over an entire nation. And that's happened over and over again. So, mob rule with democracy. With a republic, we elect people who theoretically are wise and even-handed and are interested in public service and who will represent our interest. Now, unfortunately, that's not always the case, but fortunately, we have enough people that do what they're supposed to do, that our republic has worked fairly well for over 225 years. But if everybody in Congress voted exactly the way the mob wanted them to vote, everything would fall apart. We would become a democracy, and particularly if they succeed in doing away with the electoral college, we'd be a democracy run by 2 states out of the 50. New York and California would decide on every president, and we'd be lost as a country, because the presidents from now till our country completely fell apart, would be all socialist. We talked a lot in the past about the depreciation of the dollar, which is inflation, being 96% since the Federal Reserve Act was founded, was created. And that's using government numbers. All right, the real numbers are much worse. But according to the government, and you can find this on their own website, just type in inflation calculator government, and you'll be taken to the Bureau of Labor Statistics, and it'll give you a little place to put in the year you want to calculate from, and then the current year and how much money you want to calculate. So you put in $1 in 1913, and then you put in the year 2020 at the bottom, and it comes out to roughly $25. And that's the government version of it. But the bad thing is that the inflation is just accelerating. It's getting worse and worse. So just from 2000 to 2012, the dollar, according to the government again, lost 25% of its purchasing power from that point. So, in other words, the loss starting in 1913 wasn't a real steep decline. It was a decline, but it was a gradual decline. But then it's been accelerating. So just in this 12-year period, the government says we lost 25% of our purchasing power. But if you go to shadowstats.com, which I highly recommend if you want to know the real inflation rate, the real unemployment rate, the real anything, you don't go to a government economist, you go to an independent economist. And this guy has no dog in the hunt, except he gets paid to provide accurate information.
Right.
And there's millions of people fact checking him. So during that same 12-year period, he says that the dollar lost 66% of its purchasing power. I'd like if everybody just would take a minute and think about something that you used to buy 5 years ago and what it cost and what it costs today. In almost every case, it's going to be a lot more.
There was a question in the chat box a few minutes ago on that previous slide that you had up. The real tax day chart stops at 2012. What is it now?
Right. I was trying to get that just before we came on the air, but I believe it's right at the end of July.
Okay. All right.
I'll get it updated, and I'm going to put this webinar up at Christian Financial Concepts. So if somebody wants to see it in its entirety, they can.
All right.
Because it's actually a two-part series. But the inflation.
Well, I mean, you used to.
If everybody's got in their mind.
You were saying, what's something that I don't eat a lot of fast food, but in fact, the last time I went into a fast food place, I was just so shocked. It tells you, I guess, how long since I had been in one. I mean, I used to think if you went to McDonald's, I'm not giving healthy eating advice here. You were out the door for $5. But now, if you want the infamous Big Mac and the fries and the soft drink, it's closer to $10 than it is $5.
Yeah. I remember when I was younger, and I first started dating, a movie theater where you could go for $1. You had a $1 ticket to get in, And there was a Italian restaurant next door where they had specials on pasta, 2 for $5.
Right.
So I'd take a girl out to dinner for a total of $6, and dinner and a movie,
Right, yeah.
Those days are long gone.
Yeah,
but if anybody's typed anything in that they used to buy 5 years ago or 10 years ago and what it costs now, I'd be interested in
guys,
what they say. But
put something in the chat box. Let us know your thoughts. Give them a minute to do some typing. We'll see if we get any responses. What are some things that you've thought of?
Well, I'll just say well, my favorite is the Knickers bar. 5 years ago, I paid like it was like 25, 30 cents or something like that for a Snickers bar, and today is $1.25, and it's half the size. So, whatever people came up with, I was going to ask them, you know, in addition to costing you more, is what you're getting also smaller?
Mm-hmm.
And
that's the big
it
trick
almost always is.
Yep.
So that's why, you know, in the Bible, God says, woe be to you who trample the needy, who decrease the bushel and increase the shekel. So, you know, that's a classic definition of inflation. And God says he hates inflation and he detests anyone who does it. Because when you decrease the bushel, they're cheating you. They didn't get a full bushel.
Right.
They only got a partial bushel. They use dishonest weights. And then they increased the shekel. The shekel was the gold money at the time. And so they said that it was worth more. It really wasn't. It was just purely inflation. And so when he says, woe be to you who trample the needy, it's because the needy are the ones, the poor people, the elderly, people on fixed incomes, are the ones who get hurt the worst with inflation. So, any interesting things popping up there, Dwayne?
You know,
I can't see the questions.
Yeah. Guys, got anything you want to put in the chat box? Anything that's costing you more today than it cost you in the past? The only thing that popped into my head right off the top, but I mean everything. I mean a loaf of bread, a jug of milk, a shirt in the department store, a pair of pants, you know, shoes. I can't think of anything that hasn't increased in price, with the exception of perhaps big screen TVs. I think the media has a vested
I remember
interest.
very well buying. I'm sorry?
I think the media has a vested interest in making sure that those TVs get more and more affordable so that they can get into your home, so that they can indoctrinate you into things that they believe you should, you know, force feeding you their spin on what's really happening. I read a real interesting thing yesterday on somebody had posted a question about what is gaslighting, and someone, I don't know who wrote it, had done just a really incredible job of explaining. You're familiar with the term, right?
I am.
Yeah. Okay. So again, that's
what
media.
What was the definition you found?
Well, let me see. I don't know if I have that exact one right here. I was going to try to save it because it was so good.
Well, while you're looking at it, let me just mention this,
because I would like to share it. It's really good. Go ahead.
Have you seen the trend in what you see on TV? It's amazing to me how quickly they've adapted. You know, it usually takes months to make a TV commercial and lots of money. But within just a short time after they started this whole fake thing about wearing masks and saying it'll protect you, it doesn't protect anybody. The Chinese created this virus and they released it on us, and now they're making billions of dollars selling masks that they say are anti-virus masks, but they're strictly the antibacterial mask, the same kind of mask that people have worn in surgery for years. They used to be 10 cents, now they're a lot more expensive, but they only can catch dust particles and bacteria. Bacteria are 10 to 20 times larger than a virus. So I heard one medical doctor say that trying to stop a virus with these face masks is like trying to stop mosquitoes with a chain link fence.
Yeah.
The virus is so tiny, it's going to go right through the mask, and yet the Chinese now are making billions of dollars lying and selling them as anti-COVID virus masks, as they call it. So anyway, the media is totally on board with this. The ad council is running these ads. I want to throw something at the TV every time I see it. They call it alone together. Well, you may have to be alone in your house and locked up and not allowed to have fresh air and sunshine and so on, but we can be together because you can think of fun games you can do on FaceTime or something. Totally ridiculous. It's indoctrination. Now the commercials, they show people wearing masks. All the good people wear masks. The bad people don't wear masks.
Right.
Well, before all this started, I was working on an article about the fact that we should make wearing masks in public illegal, because that's how Antifa and some of these other socialist Marxist groups, including Black Lives Matter, get away with what they do, because they cover their faces. They wrap bandanas around or whatever. And I was doing my research and I found out that in Florida, there is actually a law in the books that it is not legal to wear a mask in public. So in most states, when the governors put out their executive orders, which are not laws, they keep referring to them as laws, they're not. Until the state legislature passes it, it's not a law. It's an executive order which can be overturned by the legislature at any time, but they're scared to do it. Anyway, in Florida, the executive order doesn't say anything about masks. It talks about face coverings, because they're well aware that there is a law against wearing a mask. Because of that very thing, because you can commit crimes and get away with it because nobody knows who you are.
Well, I read an article yesterday there's one airport where they've already deployed these. The police, the security on the airport premises, they're wearing a special helmet with a visor that does facial recognition, and they just walk through the airport, and this thing is scanning everyone's face and comparing it to a database of known terrorist or no-fly, or probably even if you got a warrant out on your arrest. I don't know, but there's a big write-up about it being an incredible invasion of privacy. I found this thing on gaslighting.
Kind of like those naked scanners. Remember that the guys are sitting around looking at women.
Yeah.
It's in the back room where they monitor the scanners.
Yeah.
And it sees right through your clothing. So.
Well, the term
good old government.
There was a stage play in 1938 called Gaslight, and in the story, the husband attempts to convince his wife and others that she is insane by manipulating small elements of their environment and insisting that she is mistaken, remembering things incorrectly, or delusional when she points out these changes. The play's title alludes to how the abusive husband slowly dims the gas lights in their home while pretending nothing has changed in an effort to make his wife doubt her own perceptions. The wife repeatedly asks her husband to confirm her perceptions about the dimming lights, but in defiance of reality, he keeps insisting that the lights are the same, and instead it is she who is going insane. So, now that we know where the term came from, we are living in a perpetual state of gaslighting. The reality that we're being told by the media is at complete odds with what we are seeing with our own two eyes. And when we question the false reality that we're being presented, or we claim that what we see is that actual reality, we are vilified as racist, or bigots, or just plain crazy. You're not racist, you're not crazy, you're being gaslighted. Now, there's a lot of examples. I'll send you this whole article, but I'll just share one or two of them.
Oh, please do. Yes, send me the link to it.
New York State has twice as many deaths from COVID-19 than any other state, and New York has accounted for 1/5 of all COVID-19 deaths, but we are told that New York Governor Andrew Cuomo has handled the pandemic better than any other governor. But if we support policies of governors whose states had only a fraction of the infections and deaths as New York, We're called anti-science, and that we want people to die. So we ask ourselves, am I crazy? No, you're being gaslighted. I'll share one more. We see mobs of people looting stores, smashing windows, setting cars on fire, and burning down buildings. But we are told that these demonstrations are peaceful protests. And when we call this destruction of our cities riots, we become racist. So we ask ourselves, am I crazy? No, you're being gaslighted. And it goes on. There's lots and lots of examples of this. I'll just grab one from the end of the list. The most egregious example of gaslighting is this concept of white fragility. You spend your life trying to be a good person, trying to treat people fairly and with respect. You disavow racism and bigotry in all its forms. You judge people solely on the content of their character, not by the color of their skin. You don't discriminate based on race or ethnicity. But you are told you are a racist, not because of something you did or said, but solely because of the color of your skin. You know instinctively that charging someone with racism because of their skin color is itself racist. You know that you are not racist, so you defend yourself and your character, but you are told that your defense of yourself is proof of your racism. So we ask ourselves, am I crazy? No, you're being gaslighted. So we see the reality, but we're told by the media that that's not the reality. This is the reality. And if they say it enough times and repeat it enough times, we either think we're crazy or we come over to their side. It's very, very insidious. And sadly, it seems to be, working on a lot of people. People that I would have never imagined would step over to the dark side have, because they don't want to be a bigot. They don't want to be all these bad things, and so they believe the lie. They've been gaslighted. So anyway, all right.
Sometimes it's easier to believe the lie because if you tell the truth, nowadays, you're subject to physical attack. I mean, these people have beaten up old ladies and left them bloody in the street because they tried to protect their stores. You're committing suicide if you go out in public wearing a red ball cap, even if it doesn't say MAGA on it. Yeah. Stores are not selling red ball caps now because nobody buys them, because you're taking your life in your hands. You never see conservatives beating up or trying to harass or anything. Liberals, we're peaceful people, but you see that awful Maxine Waters. I still can see this, this press conference she gave. She says, wherever you see Republican lawmakers or conservative people, you call them out. You gather, she said a group, but she meant a mob, surround them and harass them and tell them they're not welcome there, whether it's at a restaurant or a shopping center or whatever.
Yeah, she really
I know
said
people
that.
who put up Trump signs in their front yard.
Yep.
Yeah. I know people who put up Trump signs in their front yard and their houses have been attacked. Somebody put out a call to 100 days before the election to put an American flag out either in your yard or in your house. And I did that. I thought it was a great idea. I stand for America. And yet some people that have done that have been abused, their flags torn down just because they're raising an American flag. So
in America,
it's crazy. In America.
I just emailed you that whole article on the gaslighting. So I just emailed.
Well, let me get back to inflation, but let me just mention one thing, guys.
All right.
Go to Conservative Truth and click archives, because Dwayne brought up about New York and how they've had the worst record of all, and yet how Cuomo's now going around the country lecturing on how to handle the pandemic because his state did so well. So I got all the facts, and there's an article, talking about comparing a lying liberal to a honest conservative. And it was talking about the dichotomy between New York and Florida. Florida has a larger population than New York, but New York has more infections, hospitalizations, and deaths. Florida has a larger elderly population, who are the ones that are most at risk. And yet, again, a fourth or a fifth of the infections, hospitalizations, and deaths of New York. And we didn't do this draconian lockdown like they did up there. There were certain things that were locked down and certain businesses that were large numbers of people would gather that were shut down for a while. But basically, the main thing that our governor did was to prevent hospitals from transferring anybody that had an active infection to a nursing home. Cuomo, whose brother, by the way, is a commentator on CNN, which is why he gets so much cover. CNN is the Communist News Network, if you're not aware of what they stand for. You didn't know that, did you?
No, it didn't. It fits.
He did exactly the opposite. He did exactly the opposite. He ordered the nursing homes to accept infected patients, and he forbade them from even testing for the virus. So they didn't even know whether somebody coming in was already sick and infected or not. And so about a fifth, I believe, of all the deaths in New York State happened in a handful of nursing homes. And there was, last count, it was 6,600. They said 5,000, then it was 6,000. Now it's 6,600 people. Elderly, helpless people died because Cuomo killed them, okay? And yet he lectures everybody else on how to handle the virus.
And instead of sending these people to these nursing homes, he could have sent them to those temporary hospitals that Trump erected, or that medical ship that he sent in. Those were never even used.
I don't think any of them had ever more than 5 to 10% of their beds used.
Right.
And we, the taxpayers, spent billions of dollars building, I mean, huge hospitals. If you've been to the Javits Center, it's, I don't know how many million square feet it is, but it's huge. Yeah. And they built 2 full hospitals there.
Wow.
And of course, Franklin Graham, Samaritan's Purse, that responds to emergencies and disasters, they went and set up a field hospital in Central Park, and that de Blasio, the governor, said, or the mayor said, "We don't want you. We don't need you. We don't need, religious propaganda here. We want people that are helping people." They were actually helping people, and they were vilified for it. Yeah. So, like I've often said, I'm not anti-government, but as you can tell, I'm anti-stupid government, and we have just so much of that going around. So what do you do to fight inflation? The typical things that people look at are gold and real estate, because they're hard assets. As I often say, if you can't hold it, you don't own it. Mm-hmm. So if the only ownership of something is verified by a piece of paper or a statement online, you don't really own it. So tangible things, hard assets, are great. Commodities, if you're trading, they can be a defense against inflation, because typically they go up when inflation goes up. So you get some protection there. Having an IRA, some people think that's an answer, because your money's not tax-free, but it's tax-deferred. And of course, using leverage. So let's look at them. The best way to beat inflation and taxes is you need to make 10% a year on your investments. Because if you're making like 7 or 8%, you're going to get taxed on that, even though 5% of it's already eaten up by inflation. So then you're maybe left with 2 or 3% at the most. So you got to make at least 10% to cover inflation and taxes and make a little something for yourself. IRAs, well, especially if you're getting older, you can contribute. Everybody can contribute $6,000 a year, $7,000 if you're over 50. But I don't think that's a really, really great idea. If anybody wants to know more about why IRAs are not a great way to protect yourself, feel free to give me a call. I haven't given my phone number today, but it's 561-753-5998. 561-753-5998. Now, for some people, IRAs can be part of a retirement plan that will help protect you to an extent from inflation. But one danger is there's a strong push in the liberal side of government to confiscate all pensions, retirement accounts, including IRAs and 401ks, and the school teachers have 403bs and so on. This is a very real thing. It's on the congressional record. They've had hearings about it. Every Democrat president since Carter has tried to confiscate IRAs. So be careful about that.
So by confiscating, you mean just taking the money?
Well, just like they took the gold. They didn't say they're confiscating or stealing it. What did they say? They say, we're going to give you better money. So they gave you a Federal Reserve note, which is an IOU.
I see.
So in this case, what they're saying is, we want to put the money in the black hole of Social Security. Well, that's not where I want my money. At the end of last year, the Social Security Trust Fund made their annual report, and they said that within 6 years, they were going to be out of money. Now, after all the devastation to our economy and all the unemployment and business going out of business and reduced taxes, if they made that same report today, my guess is they would say they'd be out of money in 3 years. All right, commodities. Commodities in general, not all commodities, more like hard commodities, like oil, gold, silver, coal, things like that. Pork bellies, orange juice, not so much, but they tend to go up with inflation. So as the dollar goes down, people look at commodities as a safe haven, but use care in how you invest it. Leverage can kill you. A lot of these ETFs, they say that they hold gold, for instance, but they don't. If you're one of the dozen or so people in the country who's actually read the prospectus on GLD, and I'm one of them, they only hold a small amount of actual gold. If you think that you can redeem your ETF shares for gold when gold goes up to 3,000, which it's probably going to do by the end of the year, think again, because most of it is money market securities, bonds, and artfully contrived derivatives. So that's why if you put up a chart of world gold and GLD, you'll see that they diverge frequently. But the most dangerous part of the ETS is the leverage, because you can get like 2 and 3 times leverage. And of course, like the Bible says, about two-edged sword. If things are going up and you're using leverage on your ETF, well, hey, you just made 2 or 3 times as much. But if they go down, you can lose everything. Commodity stocks. Well, if you're looking at carefully selected stocks, they could be okay, but look at stable companies, not brand new companies. Stable producers of oil, natural gas, metals. And this is just my opinion, but I think that water could become the most important commodity of all. 40 years ago, Dwayne, would you ever have believed that people would pay $3 or $4 for an 8-ounce bottle of water?
The first time I saw...
I would have thought you're crazy.
The first time I saw a machine that sold water, it was in Portland, Oregon, I was stunned. I just never even thought about it. I mean, water was free. I mean, I realize you pay a water bill at your house to have water, but I was shocked.
So it's a lot of different things. Our groundwater is being contaminated more and more, so a lot of places water just isn't safe. And it's convenience. People have disposable income, they're lazy. Well, instead of filtering their water in their house, which they could do, and bring a bottle of water with them, they just pay $3 or $4 or $5 for it. If you're going to invest in futures, make sure that you're trained by somebody like Dwayne. Not just somebody like Dwayne. I mean, I've looked at a lot of different programs out there, and his is the only one that I would consider personally.
Well, that's very kind
just
of you,
because
sir.
he's got the track record. Well, I'm not being kind. I'm just being truthful. You've got the track record to back it up, you know. So, real estate. Well, traditionally it does well in highly inflationary environments, but be careful about residential real estate. We could see a serious downturn because so many trillions of dollars of these mortgage-backed securities and CBOs, if you don't know what they are, they're securities that the Wall Street guys just made up, and they buy mortgages, and people think, well, mortgages are safe because people are going to pay their bills because they don't want to get kicked out of their house. But they package in with the good mortgages a bunch of mortgages that have already been defaulted on, houses that are in foreclosure, and so on. And so nobody knows the real worth and value of these things. And they've been sold over and over again to where if you are the one that ends up holding it and you try to trace it back and find out what it's really worth when nobody wants to buy it from you, it's almost impossible to find the person that originally issued it. So they are unwinding, they're dissolving them. And I think the government should just make them illegal, period. But that alone could cause a downturn in real estate. Plus, as most of you know, I believe that we're going to see hyperinflation again. Remember what happened in 2008, even without hyperinflation, just a big crash in the stock market and a real estate market that brought real estate down by about 50%. So if you're really experienced in real estate or you have a professional that you can trust, then certain real estate markets are going to do better than others. That's always the way it's been. It's a very regional market. But right now, the best bet is commercial property in the predictable path of development. I've got one. Yeah, everybody knows I'm a gold guy, and I think I've got 100% of my money in gold. But the Bible says you're not supposed to do that. Not talking about gold, but it's talking about investments in general, that you're supposed to have different investments. You're supposed to not put all your eggs in one basket. Okay. So the only things I feel really safe with long term are gold and real estate. So I've got a good percentage of my money in a real estate investment that is returning me over 20% a year.
Wow.
Last year did over 30%. So feel free to call me if you're interested in looking into that. But commercial property that was in the predictable path of development was the only type of real estate that went up in 2008. Everything else dropped. Leverage, okay, I'm not normally a fan of leverage. There's a real good course and book called They're Stealing From You. And it's how to get out of debt quickly and easily. So I highly recommend it. But if you've got an ARM, an adjustable rate mortgage, get rid of it right away. Because although you might be paying 4 or 5% now, if it's indexed to inflation, you could be paying 25% and lose your house. So even if you will, you have to pay more interest, convert your ARM to a fixed rate mortgage, and you'll be a lot safer. But I used to preach, and I mean for 30 years, I told everybody, get out of debt, don't have any debt. Today, I feel differently about your primary home for a number of reasons. I won't go into all of them. One of them is most states have a homestead exemption, which is great, but mainly because you're going to have to have a place to live, even in a crash. So it might as well be your own home. And I could write a check and pay off my mortgage today, but I don't do it. And people say, well, why, Tom? You know, you always say don't have any debt. Well, mortgages are a different kind of debt. It's almost like you're paying rent on a house. You're going to have to pay something to live someplace. But when the dollar crashes, I'm going to be able to pay this house off in worthless dollars. I could take them a stack of $100 bills worth several $100,000 and pay off my mortgage. And the money's not worth anything, but they have to take it because that's the way the contract was written.
Yeah.
If I was a mortgage guy today, I would never write another contract in dollars. I would write it in gold. I'd say every month your mortgage payment is 1 ounce of gold, because that 1 ounce of gold is going to go up 10 times, 20 times, 30 times in a hyperinflation. Okay, gold, of course, it's always been the number one choice to beat inflation. That's never going to change. It's the only asset class that has a direct inverse relationship with the dollar. So as the dollar goes down, I headlined this thing, how to benefit from inflation. If you have your money in the bank, you're losing money to inflation. You have money in bonds, CDs, annuities. As the dollar gets ravaged, then your purchasing power goes down. But gold has a direct inverse relationship with the dollar. And as the dollar goes down, it goes up. Mm-hmm. So gold has risen dramatically over the last 80 years as inflation has just really torn the dollar apart. One last little piece of advice: don't make the huge mistake of treating gold as a commodity. I know they put gold into commodity indexes, but if you're good at reading charts and you know what you're doing, if you compare a commodity index without gold and silver to a gold and silver index, you'll see them diverging many times. Sometimes they run together, just like sometimes gold will run with the stock market, but it usually runs counter to it.
That's right.
But if you treat gold as a commodity, that's a big mistake, because gold is money. Always has been, always will be. One last example: 40 years ago, if you invested $10,000 in the Dow, it grew to $105,000. If you invested in gold bullion, it grew to $320,000. And if you invested in investment grade gold, which we're using the PCGS 3000 index for numbers, it grew to $680,000. And if you had high grade investment grade gold, it grew double or triple that, depending on exactly which coins you had. So stocks suffer from inflation. Gold and real estate will keep you even with inflation, because inflation over that same 40-year period of time was about 30 times. Gold was about 32 times. So you made a little bit.
Now, Tim had a question about the real estate. Because you mentioned commercial real estate, and he said, well, what about all the retail businesses that are failing and people opting to work from home and giving up their offices? How does that play into your suggestion of commercial real estate?
Good point. In general, like I wouldn't invest in shopping centers or office buildings or things like that right now. But there's always going to be a need for commercial property.
So are you
can't put a Walmart supercenter. I'm sorry?
Are you talking raw land?
Yes.
Or are you just talking land?
No, raw land, but that's in the place where the development is going. Okay. Most people don't know this, but Trump actually made most of his money in what's called land banking. And I've got some information I can send people about that. It's fascinating stuff. But people think he made his money in construction and golf courses and hotels. No, most of his money was made in buying land when nobody else wanted it because they didn't have vision, and then building on it later on when it was worth so much more that he didn't have to even put down a down payment on his commercial construction loan. The problem with most land banking projects is that they're done in LLCs or limited partnerships, I mean, which I don't like because I don't want my money commingled with other people's money. And the general partner doesn't have any skin in the game. He doesn't invest anything in it. It's just his idea, you know. Mm-hmm. So he gets 20% of the profit if it's profitable, and he loses nothing if you lose all your money. What I like about these people is that they buy the property outright. They don't just have 15, 20% in it. They buy it. They own the property. So obviously they believe in it, and they've done their research. And then when it gets in the pre-development stage, which is the most profitable stage of land development, that's when the city's putting in the roads and the water and the lights and so on, the infrastructure. The city's not going to do that unless they know that the development is coming. So that's the most profitable phase, and that's where I own my property. One of the indicators they use is the Walmart indicator, because Walmart spends millions of dollars before they build a Walmart supercenter. Well, they're not going to build it unless they know that at least 250,000 population are going to be within a few miles to use it.
Right.
Other things that you have to have. I mean, you can't put a Walmart supercenter in your living room. You can't put a school in your garage, and you can't put a hospital in your shed out back. I mean, these are things, big things that we'll always have need of. Warehouses or other things. So that's why I'm staying away from office buildings. I mean, half the office buildings I drive by are empty or begging people to come in for half price. Same thing with shopping centers. But these are the kind of things that people have to have. So that's why I like land banking.
Interesting. Very interesting. Well,
and you can put your IRA in it, by the way. I forgot to mention that. There's a lot of things you can't or shouldn't put your money into. Like, for instance, I wouldn't put my money into a gold IRA because, again, I have no access to the gold. But land, you actually get the title to it, and you can do it in an IRA. So that's one real good option for defense from inflation.
One of our members,
so you think I talked enough, Dwayne?
One of our members is interested in talking with you. Could you give out your phone number one more time?
One more time. 561-753-5998. Actually, I'll give it a second time for free.
Okay.
561-753-5998.
Got it. Got it.
And that's my direct line. It goes right to me in my office.
Okay, great. Well, thank you so much, Dr. Tom.
Well, thank you for the opportunity. It's good talking to you and your fine audience. God bless.
All right, we'll talk to you real soon. Bye-bye. All right, guys, let's finish up this recap real quick. Okay. S&P. Concierge Trade Alert was to be short 35.58. And you can see what's happened. Here's the Dow. The alert was to sell 28,895. When I measured it, it was down 626 points at $5 per point. That's $3,000 per contract traded. Really nice to see some movement in the markets. Now, this step line coming down on the left side of red and falling steps over and down, over and down, over and down. You're watching for it to step over, step over. That's going to put it on the right side of red and falling. Then you'll be looking for the first green candle that closes above the step line. Right there. That's the exit price. Closing price of the first green candle that closes above this step line. Okay, so that was the S&P and the Dow. Let's go to Russell. Okay. Okay, last night's alert on the Russell. back up again. Here we go. So last night on the Russell, the alert was to be short. 1581. Every member of the CFRN family got this alert last night. Every one of these alerts that I've shown you so far. 1581. And we put in a low at 1534. So it's roughly 50 points at $50 a point. $2,500 per contract traded. Let's look at the NQ. Alright, the NQ alert was to be short 12,306. Got a swing low at 11,722. So I could do that in my head, but 12,306 minus 11,722. 584 points. At $20 a point. It's $11,680 per contract traded. I'll say it again. Every member of the CFRN family got the alert last night. It looked just like this. We don't have an exit signal yet. We might have one on this candle. Okay, here's red and falling. Here's the step line. Okay, price starts to walk sideways. The step line is now on the right side of red and falling versus being on the left side. We're on the right side. So if this candle closes above the step line, the closing price of this candle will be the exit signal price. Now, again, that can't get you out at the swing low. The only thing that can get you out at the swing high or swing low is luck, because you don't know it's swing high or swing low until after the fact. But it gets you out to usually in the neighborhood. Okay, so if you ever wondered what $11,000 per contract trade looked like, well, this is what it looked like. Of course, you could have taken your exit anywhere along the way. There's a weekly zone at 11,980. Another weekly zone at 11,931. And then 11,868. And the lowest weekly trading zone for the NQ for this week is 11,731. We've spiked down to 722.5. That's the NQ. Okay, crude oil. The alert on crude was to be short 41.45. And from 41.45 we traded down to the zone at 40.25. So from 41.40 to 40.40, that's $1,000 per contract move. But it came right down to the zone, still have one more zone below, 4220/25, and we bounce back up to the trigger. So from 41.45 minus 40.25, it's $1,200 per contract traded. Gold, this was the alert here to be short 1945. For this trigger, we made it down to 1933, $1,200 per contract traded. This one, market structure, did not support this trigger because the short, you want to be below the BBC. Now, it was a trigger, but you would be selling right into support. Over here, we had red and falling, and we anticipated support at the zone, but we traded through it. Now we've traded through it, we've pulled back up to the BBC, and so now what we're looking for is another leg to the downside. And on silver, the alert was to be short 27.45. So from 27.45 down to the zone at 26.87, right back up to the trigger. So 1, 2, 3 triggers. Now this trigger and this trigger, they were both below the BBC, and you had red and falling. This one was a little more difficult to navigate because at the time of trigger, you were above the BBC. And when we're above the BBC, we're looking for longs. When we're below, we're looking for shorts. As you can see, leg, retrace, leg, retrace, leg, retrace, leg, retrace. A little head fake here. It almost looked like we were going to trade higher. And then we just continued on down from 27.45, 27.45. $27.45 minus 26.87. It's 58 cents. So that's a little over $2,500 per contract traded. All right, good word for the day. Been talking about building your dream house. Well, what is your dream house? Where is your dream house? Revelation 21:4 says, "There shall be no more pain, for the former things have passed away." Dave Dravecky pitched for the San Francisco Giants baseball team in the 1980s. In 1988, doctors discovered a tumor in his pitching arm, and in 1991, his arm had to be amputated. In his book, When You Can't Come Back, he writes about his sense of loss. In the book, he says, "I miss doing things with my own two hands, and of course, I really miss baseball." There's a scene in the movie Field of Dreams where shoeless Joe Jackson, one of the 8 Chicago White Sox players banned from baseball for conspiring to lose the 1919 World Series, said, "Getting thrown out of baseball was like having part of me amputated. I'd wake up in the night with the smell of the baseball park in my nose and the cool of the grass on my feet. Man, I did love this game. I'd have played for food money. The sounds, the smells, I'd have played for nothing." Dravecky continues, "That scene had a powerful effect on me. I missed those feelings too. The feeling of stitched seams as you cradle a new ball in your hand, the sound of a bat cracking out a base hit. I'd have played for food money. I'd have played for nothing. We live in a fallen world where we lose limbs and even loved ones. But heaven will make up for all we've lost. We'll be reunited with our redeemed loved ones, and we'll have bodies free from sickness, pain, and every form of limitation. There shall be no more pain, for the former things have passed away. One day, you will live in your dream house. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866. Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.